Investing in farmland can be a lucrative and stable way to diversify your portfolio. And a farmland ETF is a great way to get started. To begin, it is essential to understand what a farmland ETF is. A farmland ETF, or exchange-traded fund, is a type of investment fund that tracks the performance of farmland or agricultural companies, allowing you to invest in the sector without directly owning physical land. The first step to investing in a farmland ETF is to open a brokerage account. You can do this through a financial institution or an online brokerage firm. Once you have an account, you can start researching farmland ETFs. Look for funds that track a specific index, such as the S&P Global Agriculture Index, or those that focus on a particular type of farmland, like row crops or livestock. When selecting a farmland ETF, consider the fund's fees, investment strategy, and performance history. It is crucial to evaluate the fund's management team and their experience in the agricultural sector. You should also consider the fund's liquidity and trading volume to ensure you can easily buy and sell shares. After selecting a farmland ETF, you can start investing by depositing money into your brokerage account and placing an order to buy shares of the ETF. You can invest a lump sum or set up a regular investment plan to invest a fixed amount of money at regular intervals. It is essential to have a long-term perspective when investing in farmland, as the value of the land and the crops it produces can fluctuate over time. Diversification is also key, so consider allocating a portion of your portfolio to farmland and other alternative investments. In conclusion, investing in a farmland ETF can be a great way to diversify your portfolio and potentially earn stable returns. By following these steps and doing your research, you can start investing in farmland and take advantage of the potential benefits of this unique asset class. Always keep in mind to consult with a financial advisor before making any investment decisions to ensure it aligns with your investment goals and risk tolerance.